Super Swing Trader. Today we're going to take a look at stock ticker symbol EVER, EVER, EVERQUOTE Incorporated. As always, we'll take a look at the monthly chart first. See that there's a strong level of demand down here, and also one down here, but price never retraced. But in March, during the coronavirus pandemic, price retraced down here, formed this large red engulfing candle and touched this strong level of monthly demand zone and kissed the level, rallied with this EMA acting as floating support. Maybe it could be a reaction to a higher time frame, like a 3-month. Yeah, so this is not demand. Demand is down here, so it just formed this black candle, down candle, up candle, but on the monthly, it's definitely a strong monthly demand zone. So we know this strong monthly of demand zone is in control, so price went up, kissed this level up here, and then came back down. So this is the confirmation that we need to go long. On the weekly, there's this level of demand that it did not retrace. It just retraced to up here, which is the monthly demand zone. The way I know it's monthly demand zone down here is because if I draw a horizontal line, and sync it to all the charts, you can see that it touched the monthly demand zone right here at this proximal line, and then it rallied. So monthly area of demand took control. That's why price did not reach this weekly area of demand. So price formed this strong weekly candle, and now it formed this level of demand. So I drew it like this because this is the basin candle, and I want to draw the zone that covers the whole bottom valley of this move. And some of you guys were wondering what was my entry. If I were to take this trade, what was my entry and what is my stop loss? So it depends on what your time frame is. If you're trading the monthly, weekly, daily, a longer term trade, longer term holding, then you wanna, if you're taking the daily, then your zone would be right here. You will have a more narrow zone compared to the weekly, so the width of your zone, demand zone, will be much smaller than the weekly, and your monthly will be much bigger than your weekly. So the idea is that we don't want to take such a large width of the demand zone, so that's why we narrow it down to the lower time frames, your entry time frame. So it just all depends on what your entry time frame is. If you're trading the weekly, daily, 4-hour, then you would want to narrow it down to the 4-hour, which is down here, which is basically like the daily zone. Yeah, so if you look at my cross here, it is basically the same thing. So in this case, I could trade the weekly, monthly, weekly, daily, or weekly, daily, 4 hours. Essentially the same thing. In this case, sometimes the daily width of the demand zone will be much bigger than the 4-hour, but in this case, it's basically the same thing. Just based off of the amount of hours formed that form the daily and the way that it closed at the end of each 4 hour is the same thing. Okay, so what am I looking for in this trade? I'm looking for the weekly time frame chart to do something like maybe a consolidation, and then go down here, and then that's my long signal. But if this week closes, because this candle right here, this black candle, is this week's candle. So if this week's candle closes like this, then I'm not interested in going long, because to me that's telling me that there's equal amount of buyers and sellers. But once this week's candle closes like this, let's say it closes like this, and then next week it starts to close lower, I would be interested in going long at these levels. But like I said before, if it just closes back again within this week, then I'm not interested in going long, because to me it's telling me that there's the same amount of buyers and sellers. But if it slowly closes and reaches to my demand zone that I'm interested in going long, then I will go long. But to me, if this closes like this, and then that's gonna make this candle close. This is the monthly, so it'll make this candle close like this, and then it can actually go down, because there's no more buyers on this. But if the buyers can keep price up here for an extended period of time before it drops down, then we know that there's plenty of buyers that will step up again when price reaches their optimal price that they want to pay. So like I said before, if someone was asking what was my entry and exit, simple. My entry is 26.64 and stop loss is 24.64, and stop loss is 21.89. So this is the line that I want to go long, and this is my exit that I want to exit. Take profit would be somewhere up here, anywhere that is a 3-2-1. So if anywhere at $30, get in at 24 and get out at $30, that would be my exit. Not gonna be greedy, just want to take my 3-1 and get out. I'm not trying to get back to all-time highs or anything like that. Okay, so this is it for the analysis. If you got value from this video, please consider subscribing to the channel and click on the bell so you get notified of new videos I release in the future. I make daily swing trading videos on stocks and forex using supply and demand. If you like the video, please hit the thumbs up button. It helps with the algorithm. I want you to transform your charts into profits and build a life you love.